Are you interested in Airbnbs and maybe want to invest in your own Airbnb, but maybe you're just not sure where to start? You want to learn how to maximize those returns and minimize the risks in a fast-changing landscape. It's changing very fast. Well, let's dive into it then. Because you're not going to want to miss this video. I'm going to give you some of the tips, some of the things that I've learned from lending on Airbnbs and also having friends that invest in them. And I'm going to give you the inside scoop on how to succeed as an Airbnb investor. The first thing that you really need to understand with an Airbnb is you got to identify the best places to invest in Airbnbs. Now, let me be clear. I live in Buffalo, New York. I'm not saying this is a bad place to do Airbnbs, but our taxes are high. And I don't know. I mean, there's just not a lot of people looking to come to Buffalo when it's a blizzard. So this might not be the best place to invest in Airbnbs if you don't live here. Find areas that people want to go to. Find areas that people are going to where they might be looking for alternatives. The second thing you really need to do is you got to analyze the Airbnb. This is, I think, during the big upswing in the price of real estate, analyzing Airbnb investments, I think is where a lot of people fell short. Because really, it was kind of like throwing a dart at any property in a good area. You knew you were going to be able to make money on an Airbnb, but that was because it was revenge summer. People were just coming out of being locked up from the pandemic and they just wanted to get out there. So Airbnbs were going through the roof, but now they're settling back down. And if you had done your proper analysis of the Airbnb investment and you had looked at the real estate data in each market, well, you would have been able to figure out that, hey, this might not be a sustainable model at these prices. Even after you've chosen the city, it's really important to analyze the factors within the city that can make your investment soar or fail. Things like competition, zoning laws. How many other Airbnbs are there in your area? Is every house an Airbnb? And why would yours stand out among all the other ones? A lot of zoning laws don't even allow Airbnbs, and you're seeing this more and more. What is the average daily rate? They call it the ADR. Well, and is the average daily rate inflated because the market's inflated? So I always like to say, if you got an average daily rate, reduce it by 20%, maybe even 30% in certain parts. The other thing you want to factor is seasonability. Virtually all markets have a high and a low season. Let me ask you this. Are you going to come to Buffalo for a vacation in the middle of winter when we just get snow and negative temperatures? No. Are you going to go to Arizona right in the peak of summer when it's 110 degrees? Have you ever taken a magnifying glass and you put it on an ant? Gone. That's what Arizona's like in the summer. Do you want to be there then? No, I doubt it. So that's their low season. So all these factors, all these things play into whether or not an Airbnb in a specific area is going to be good. And you got to factor that into your numbers. This is especially true for destination markets like lakeside retreats, ski towns, and beach towns. Think about this. When the hurricane came through Florida and hit Tampa, what if you had a couple Airbnbs pretty close to the beach or not even close to the beach, and that hurricane crushed your properties? Chances are you couldn't get insurance that covered hurricanes. So it could be a total loss. How do I know this? I know a lot of people that went through that. It's very sad. They had beautiful Airbnbs. They were making tons of money, almost like printing money. One hurricane, totally out of their control, wiped out. No insurance money because the insurance companies won't insure against that. Are you factoring this into your plan for your Airbnb? The other thing you need to do is you need to compare Airbnb investment opportunities in multiple markets. So do a market comparison, a market analysis, and that should reveal the trending revenue and the occupancy numbers for each market that you explore. So wherever you're at, whatever market you're looking in, you should be able to easily find these numbers. Are you seeing a decline in certain areas? Are you seeing that seasonability? Once you dive into this, you will. If you haven't settled on a city or a zip code to invest in, you can enter up to 4 locations at the same time and compare Airbnb revenues. You can compare occupancy rates. You can compare the rate of growth or the rate of decline. Even after you've picked a city, you can use market comparisons to drill down to the top performing zip codes because each area, let's face it, right? If I just said you want to be in Dallas, there's different zip codes. So you can really drill down and get really specific about your analysis and about these numbers by zip codes. You can also look at property sizes and try to maximize the revenue and make the max amount of profit that you can on each Airbnb. You also need to estimate your Airbnb investment income. Now, like I said, when everything was going good, it was easy to. every Airbnb was making money, but right now it's getting tough. I know a lot of people that overpaid for properties because they bought them at the high. They put tons of money, the best furniture, and some of those Airbnbs had some issues. They had break-ins. Their vacancy rates are going up. So when you did the analysis, did you factor these things in? Well, that would be estimating your Airbnb's investment income and run it on the downside, 20 to 30% off. The fifth thing you should really consider is strategically price your Airbnb. It's important to remember that there's no single rate that's right for any property or any Airbnb. The daily rate that you offer it changes. Sometimes changes by the day, sometimes by the week, sometimes by the season. And it really changes by supply and demand in that market. A successful pricing strategy would adapt to all of those different factors. The high season, the low season, it would factor all that in. But this takes a lot of work, doesn't it? Oh, you thought Airbnb investing was easy. Well, you know what? It's not. Airbnb investing is not easy at all. It requires all this stuff. You got to factor all these conditions in. So maybe what you should do, if you're really looking at Airbnb investing, go back to the beginning of this video and start taking some notes. I can give you a quick recap. Let's go back to the top. The first thing when looking at an Airbnb that I mentioned is to identify the best place to invest in for Airbnbs. Then I said you got to analyze the Airbnb investment. You want to look at the real estate data for each market. So even after you've chosen a city, it's important to analyze all the factors within that city that can make your investment soar or fail. Don't buy an Airbnb in an area where there's zoning laws against Airbnbs, or there's a ton of competition, or the ADR, the average daily rate, is not what you want it to be. Also, seasonality is an important thing to factor into your analysis of where you want to do. There's a lot of markets, actually all markets have a high and a low season. Are you considering that? Or are you just going there when you're on vacation saying, oh my God, this is so beautiful, and then you didn't see the bad season? And also, if you're looking at destination markets, lakeside retreats, ski towns, beach towns, factor in that's big. There are high and low seasons that swing drastically. The other thing we talked about was comparing your Airbnb investment opportunities in multiple markets. And this is easy analysis to do. You can compare up to 4 different properties. And once you find those 4 different properties, you can drill down by zip code. And you can look at them and you can really compare the revenue, the occupancy, the rate of growth, or the rate of decline. You can even pick up whatever city and you can really drill down to the top performing zip codes in those areas. And that's going to help you maximize your revenue and maximize your profitability. Also, estimate your Airbnb's investment income. Factor the low side and the high side, blend it out. And then strategically price that Airbnb. So if you're at the point where you have it, you got to remember there's no single rate that's right. The daily rates change all the time. They change based on seasons. They change based on supply and demand. They change based on all sorts of things, and you need to factor that in. So folks, I hope this gives you a little bit of a baseline for when you're considering Airbnb investing, because I know a lot of people jumped into this, and I know there's going to be a lot of people that are going to get hurt, which is actually an opportunity for some of you watching this right now. Because a lot of people, well, when the market starts dropping and the price of their Airbnb goes down and they're not making the money they thought because they bought it too high, it's a great opportunity for you to swoop in and buy low and rinse and repeat. So folks, I hope you liked this video, and if you did, check this one out right here. Predicting the future of real estate. What's next? Thanks for joining me. Go out there and kick some butt in the Airbnb space.